Using the simultaneous break to identify institutional order flow in Apple, QQQ, DIA, and SPY. So first, let's identify quickly what is a simultaneous break. Well, multiple indexes or sector ETFs setting up actionable signals in the same direction. That's what we're pretty much looking for. We can also identify them on the stocks within those sector ETFs or indexes. But when we're identifying them, this is what we're going to be looking at. And what that allows us to then do is say, well, the algorithms, as we talked about in the first part of this series, what were they told to do when this market condition presents itself? They were told to trade the whole market. They were told to buy or sell, depending on upside or downside, actionable signals. Then they were told how to do it by slamming the bid or taking the offer aggressively, because actionable signals tell us we can expect that to occur. And then when to do it, well, when those simultaneous breaks simultaneously break. That's when they were told to do it. So now let's go identify the simultaneous break. So starting with the S&P 500, we'll notice the hammer 60 right here. So that is 2 down. It is also hammer. That's actionable to the upside for the 2-2 reversal. If we go to DIA, also potential 2-260, hammer actionable signal. If we go to IWM, it was 2 up, no signal to take out. They did form one here that you could have taken if you wanted to, but we just saw no signal here, so we're like, nah, we're not going to look at that one. Then we go to go to QQQ, and you'll see what? This one's not like the others. Inside 60 hammer. So inside bar actionable, hammer actionable, and the inside bar tells us, compared to the DIA and SPY, this was strong enough to not make new lows. So this shows relative strength to the other 2 indexes. So we know if we're going to buy this, we can now simply just buy the Qs. And you might be like, well, where would my stop go? So with a simultaneous break, if all of them break at the same time, you can have a nice wide stop here. You can just say, hell, or you can just say, hey, they're all breaking. The algorithms were told to buy or to trade everything, to buy it, to do it aggressively by taking the offer, and to do it right now. So when this condition's here with the 60 in force, we don't want to get out. And then once that has closed, what you can say is, well, if that's going to fail, they're going to go rev strat 60, because that's what a reversal looks like. And what you'll see is there is no reversal. 2 up continuation, 2 up continuation. They keep gunning. So if you want to be a futures trader, you can just do that. Why not? And if you want to be a futures trader, what you'll have to note is this setup did not present on the NQ. You might have gotten an inside 30. So you had this here, but you'll see the 60-minute time frame is different. And that's why we talk about using the bottom of the hour, not the top of the hour, which the futures give you the top. QQQ gives you the bottom, so you can identify that setup. That's the difference. And then what did we do, or what did I do today? So instead of trading the Qs directly, what I decided to do is look at the Qs and say, well, that's really inside still at that point. And what I mean by that, I don't know if it'll let you see this, but yeah, so it's not going to let you, but you'll see that 60 trigger happened $3 under or actually $2.80 under yesterday's highs. So still really inside day. Doesn't mean it can't work, but means I'd prefer things closer to going 2 up or already 2 up on the day, because those are already trending or just starting to trend. So what I identified within the Qs was Apple. I said, well, if you identify the same signal, here's the simultaneous break setting up. Magnitude, we'd want to see that taken out. And you'll see this is a lot closer to doing that. So they did that right on the break. They made the day 2 up. And then you got the inside bar add. So if we compared that to the Qs, notice how Qs took 3 hours to take yesterday's highs. Apple took that single hour and then kept continuing. So that's the difference when you're identifying some strength based on those daily time frames when we see something like this set up. So when we're looking at Apple, similarly, it's like, how would we manage this position? It's like, well, you can go 50% of that candle. You can go the whole candle. Doesn't matter. It's up to you. Then once that closes, we say, how are you going to reverse that? And then the answer to that is, well, if they took this out, that would be reversing. So we bump our stops there. If not, break even. It's up to you. And at that point, as long as we don't go 62 down, this is trending up. Inside bar, that's setting up to go higher. There's your 212 measured move. It's like, well, how big should that move be? About $1.20. So what do we look for? About $1.20. You get $1.11. So slight 9-cent loss under that, which at that point, we might even get this into the close. We have 1 minute. So now, as we come into the close here, since I'm still holding that, what am I thinking? It's like, well, I'm long here. Unless we get a gap down, which is possible, that's setting up to go 212 tomorrow morning and keep going. And if we go on the day, technically closer to 2 up. If we go to the week, 2-2 reversal on the week with the Rev Strat has magnitude to take that out, 180.30. And then on the month, at this point, we are bright green. So the monthly participants have decided to buy, do it this month, and do it aggressively by taking the offer. So at this point, all of our signals and everything still points upwards. So I would like to hold that, see if it keeps going to get the weekly magnitude. Quickly, before we end the video, I just wanted to show you my fills, and I guess we can also talk about this. So before that flip happened, a minute before, I recognized it, and I was like, well, all my shorts from last week that I have running positions on to see if I can add and keep making money there are starting to come back, and they're green on the day, and we're about to get simultaneous break to the upside. So a minute before, I was like, yep, I'm getting out of that stuff. And then right when it broke, I was like, I'm going to use the money from that, and I'm going to get into some Apple. Sadly, bank holiday today, so I was only able to get one contract. I believe I had like $560 of buying power. So got one contract, made $100. They just closed at $460 on the offer from $364. So they're still good. I'm going to maybe add to that tomorrow if we get confirming signals. So great example of some risk management on the losing positions or the ones coming back, and then using that to get back into winning positions. So just to recover, simultaneous break using multiple indexes or sector ETFs, setting up those signals in the same direction. And then what you can do is then trade a specific stock if you want to, or just trade this simple index or ETF. And what that tells us is they're trading everything, they're buying everything, they're doing it aggressively, and they're going to do it right when that break occurs. So we want to stick around. And hopefully this was helpful. And in the next video, we're going to talk a lot about time frame continuity and getting more into those principles, which is very exciting. And I'll see you guys in the next video.